Welcome back guys to another YouTube video. Now in today's video I'm going to be explaining more about market orders in forex. Now for those who haven't subscribed to our channel, I think this is the right time. Subscribe to this video before you forget, because you might watch it and you skip to another video unless subscribing. So do subscribe to our channel and also like this video so many times for it to be appreciated out there, and also share this video plus commenting down the description what you have learned from this video. Now without wasting time guys, for the recommended forex brokers, click the links in the description. We outline for you the forex brokers we recommend you to use for the international people and the local people. Now today's topic, like I've told you before, I'm going to be explaining about market orders. The term order refers to how you will enter or exit a trade. Here we discuss the different types of orders that can be placed into the foreign exchange market. Now the term order means how a trader is gonna enter or exit a certain trade. Now when we talk about a trade, we talk about currency pairs which you are going to be placing. It can be JPUSD, it can be Euro USD, it can be USD JPY. So you placing a trade of a buy or sell, that is what we offer, or that's what we call an order. So be sure that you know which types of orders your broker accepts. Different brokers accept different types of orders. So that's why we recommend you to use a broker called Infinox Capital, because each type of order is being placed there for a trader to use. Now you'll find some brokers don't have these types of orders. Now that's why we took time to specifically get for you a broker whereby is going to offer you all types of orders you're gonna be using while trading the forex market. Now the first order we're going to be explaining is what we call market order or market execution. Is where the trader enters the trade at the current market price. For example, Euro USD is currently trading at 1.2140. This is our exchange rate. If you wanted to buy at this exact price, you will click buy and your trading platform will instantly execute a buy order at that exact price. I think even the explanation is more better. Market order or market execution. That means if you have analyzed a certain pair, or if you are in a certain signal group and they tell you buy Euro USD, that means there is no analysis you're going to make on that pair. You will just go edit your lot size and put the recommended lot size which is recommended to that account of yours you are trading at the moment, and just press buy or sell. So that is what we call the market order or the market execution. Is when a trader places a trade at that current market price. I don't know whether we are together. Market order or market execution is when a trader places a trade at that exact current market price. Let me head to the second one. Now we have what we call limit order. Limit order is far divided into two. We have what we call buy limit and we have what we call sell limit. Buy limit and we have what we call sell limit. Now I'm going to be explaining one by one. Now buy limit, this is used when the trader wishes to a currency at a price lower than the current market price. Usually the trader expects the market price to fall before going up again. A live example, if you want to buy beans from the market, but you find that a kilogram of beans in the market currently is at 3000 UGX, and they wait for the price to fall to around 2500 UGX, then they buy the beans hoping for the price to rise around 3500. There I can make a profit of 1000 instead of 500 UPX. The example you are trying to bring out is, you will find Let me say you have made your analysis on JBP and you'd like this pair to buy. So you will find this pair has bought over like 30 pips, and when you focus on your analysis, you will find this pair has to make a little bit pullback of like 20 pips. Now you will get what we call a buy stop, a buy limit and you place it below the 20 pips. Remember, the market has moved over like 30 pips. Now you'll place your order below the 30 pips. That means you'll be placing your order 20 pips below, and you wait for the market to come and pick up your order so that the price can continue buying in that trend. Hope we are together for you to make profit. Now we have what we call sell limit. Sell limit is the selling of a currency at a price higher than the current market price. Example, the current market price is of Euro USD. Let me say it is 1.14000, but after making a market analysis, I find the euro will sell at 1.14500. I put my sell limit order at 1.4500. Now all these are exchange rates of Euro USD, but orders only if the market moves up to that price where the order has been placed. Now for sell limit, we are going to be selling a particular pair after that pair has come back to that level you would like it to drop from, because that is a sell limit. Now a sell limit, that means if you are to sell something, you want it to come at the lowest price, then you sell. After selling, that means it will continue dropping to that side anticipating. Now if currently Euro USD is at 1.4 thousand, but after making market analysis, you find Euro USD I find Euro USD will sell at 1.500. I put my sell limit order at 1.500. Are we together? But orders only if the market moves up to that price where the order has been placed. Now remember, if the order is below, let me say if the market is currently selling, you're going to wait for that market to buy, but in the process of the market buying coming to your side, that's where it will find your sell limit, and your sell limit will be activated. So that means you're selling a particular currency pair on the lowest price, hoping it to drop and to the highest price, and you make profit. So that is what we call sell limit. And buy limit is buying of a certain currency at the lowest price and you sell it at the highest price. I'm moving on to another order, which is called stop orders. Now stop orders, they are differentiated into two. We have what we call sell stops and buy stops. I'm going to start with the buy stop. The buy stop is used to buy higher price than the current market price. This is because at some point the market direction is not yet decided, consolidation, but then the trader thinks if the price reaches a certain price, it will not fall but rather continue to buy or move up, and the vice versa works for the sell. I don't know whether we are together. If I let me try to give you an clear example about the buy stop. So let me open up my MT4 and I give you a clear example about the buy stop and the sell stop. Now these two orders, they differentiate because the one order you are buying and another order you are selling. So you have to differentiate between the two orders. Now I'm straight on my MT4. This is the pair called JBP USD. We go back to our notes. The buy order is used to buy a currency higher price than the current market price. Now let me say you want to buy JBP USD. Now JBPUSD at the moment is at this level, but you want to buy it. That means if I get my horizontal line and place it on that level, on this level, and also get another horizontal line and place it on this level. Now let me try to zoom out. You can see that at the moment the price is around 1.16229, but you have placed your buy order. Let me indicate it. This is a buy order. Buy order. Now this is your buy order right here on this horizontal line. Now you're waiting for the market to make a pullback or weak rejection, and buyers jumping in the market to push the price to your side. Now when the market change the trend from selling back to buying, that means on this particular level it's where you have placed your order and spending. Now when the market approaches this level and activates your order, that means your buy order position is being activated. Now you're going to wait for the price to short all the way to the upside for you to make profit. So that is the buy order. I'm going back to my notes. Now for the sell order, that means you're going to make it the vice versa of the buy order to the sell order. I'm going back to my charts. Now for the sell order, let me say the market at the moment is buying, but you want to sell at the price which is higher than the current market price or lower than the current market price. Now if the market is buying at this particular area, that means you're going to place your, let me get this. Now the market is buying. Now from here up to here, let's pretend this chart is not there. Now the market is buying at the moment. Oh, this is not actually there at the moment. Let's pretend this chart is not there at the moment. Now the market is currently buying, but you want to sell this pair. So that means for you to set your sell stop order, you're going to set your sell stop order below the current market price, like on this level. That's where we're going to put our sell stop order. Why? Currently the market is buying, but for us we have anticipated according to our strategy that this pair is going to drop. So you come here and place your sell order. After placing your sell order, you wait for the market to either continue buying. If it continues buying, that means this sell order of yours is not going to be activated. But if it doesn't continue buying and it makes a weak rejection and it drops to the downside, that means this sell order of yours is going to be activated. So that is the difference between the sell order and the buy order. I hope we are together. I'm going to move on another order. Our next order is what we call the stop loss order. Now the stop loss order, this is one of the most important orders in forex trading. Every trade that a trader will execute must have this order. Now still a sell stop order is a type of order whereby it involves a lot of what we call risk management. Risk management comes along with a risk to reward, or which amount of money are you willing to lose for you to make the amount of money you want to make. If you have an account of, like, let me say $100, and you enter a trade from here while selling it, and you find you have your TP around this level. So if you try to calculate the pips from this current market price you have entered the sell up to your take profit, I see they are over 70 pips. Now for you to make or to gain the 70 pips, how much money are you risking? Now that means when you draw your trend line or resistance trend line, you will tend to put your stop loss around this level. So if you calculate from this level where you placed your sell stop up to this level, that means you are risking 30 pips. Now if you compare 30 pips to your account size, which is $100, 30 pips, that means if you have used a lot size of 0.01, that is $3, I mean. Now $3 compared to your account, that means that is 3% of your account. If this trade doesn't go your way and it comes back to hunt for your stop loss, that means you're going to lose $3. When you deduct $3 from the $100, that means your account balance will remain as $97. So the stop loss helps to keep your account not to be blown, because you're not going to be on the charts 100% or the full day. You'll find you're going to place your trades and walk away. Now the stop loss helps you if there is uncertainty of market volatility when you are not on your charts. So that is the main role of a stop loss order. And this is our last order, which is the take profit order. This is another most important forex order every trade must have. Why? This helps a trader to take the right profit from the market before exiting a trade. Now the take profit also comes with a target. If you have placed your trade, how many pips do you offer to take from a certain trade? We'll find there is a trader who would like to take over like 30 pips, or you find a trader would like to take a pips of over 300 pips. Now you measuring that, let me say if I count from here up to here, I can see we have over 160 pips. Now 160 pips, if you set your take profit at this level and you find that the market has passed from this has activated your sell stop, the market dropped and passed your take profit where it could be, and it came back, made a pullback. So that means if this market didn't respect this level and you find for it, instead of continuing dropping, it can bounce back and buy. So if you don't have a take profit on your trade, you'll find the trade went into a profit even past the way where you will put your take profit. That means whether you're online or offline, you'll find this trade has been exited by the software. But if you don't have a take profit, that means you're going to make money, the trade will be activated, but the market conditions might change the trend and you find you are back to loss. Why? You didn't use a take profit. So if you are trading, you have to be with a target. Target comes with how many pips you want from the market. There's a trader I know, he only trades 20 pips, so you must be with your take profit on those 20 pips. If you don't have your take profit on those 20 pips, that means that trade will make money for you, it will come back, retrace. After retracing, it will bring you back to loss. Why? You didn't have a take profit on your trade. I think that's all we had for you today. For those who have stayed till to the end of this video, if you haven't subscribed, please do subscribe to this channel. We want you to be the first person to receive alert when you have uploaded a new video like this teaching about forex trading. Also, we recommend you to follow us on our social media handles: Instagram, TikTok, Facebook, WhatsApp, Telegram, and our website, plus signing up with our reliable forex broker, which is in Phoenix Capital. So the links are down the description. After watching this video, click down the description and follow up all the links which are shortened there in the description. If you're trading crypto, we have the brokers we recommend you to trade crypto. If you're trading volatility indices, we also have the link for the broker we recommend you to use. If you're trading forex, we also have the links of the recommended forex brokers we recommend you to use. So hit the links in the description and follow up all those links. Thank you guys.